All right, guys. Like what I was saying, this is the system I usually use to catch spikes. For instance, when it reaches this node, usually a spike will come. Whenever it reaches this node, I think you can all see that this is a Boom 500. It has reached this node that is written number 5. I think you can all see it. So whenever the chicks reach this node, a spike is usually going to come. So, but if you want to enter a trade that will not give you a very huge drawdown, you should trade according to the trend. So let's say if the trend is going upwards, then you are trying to catch spikes on boom 500 or boom 1000. You're most likely to catch spikes without getting any huge drawdown, because most of us end up closing trades just because the drawdown will be too much. Just imagine if you had entered a trade here, then you want it to buy, then it draws you down like this. You end up closing the trade because you think it's no longer going to spike. But in the long run, it is going to spike and cross that point. So the technique that you have to use when you're catching spikes, catch the lot sizes you use depend on the type of a trade that you're entering. For instance, let's say you want to enter a trade here. If you want to enter a trade here, it's pointless for you to use a very huge lot size, because a very small spike is most likely to come, and it will never spike like this, right? Then spike, 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 spike until it reaches this point. It is going to spike, then pulls back, spike, pulls back, maybe to this point, spike, more, pulls back, then it will later buy. So for you to to make more profit, what you're supposed to do is you enter your buy here, right? But you'll be using a very small lot size. Why do I say so? It's because of the H1 candle. If you go to the H1 candle, we're most likely to see that the candle is bearish. Can we all see this? The candle is bearish, right? And we're only left with 6 minutes to reach 6 o'clock so that the candle can change. There's gonna be a change of a candle after this hour. That is when the buy entry will become valid. So the safest way to trade such kind of an entry, what you do is you can start by using a very small lot size. Let's say your account has got $100. You can start by using maybe 0.2. Then the moment it breaks out, that is when you add more positions. If you trade like that, you're most likely to make more money. Plus, you have to apply smart money concept when you're adding positions. What do I mean when I say smart money concept? I'm saying you can see here. Let's say we were selling Boom 500. Okay. Here, there's a pullback. Then, if you draw a straight line here, let me just draw it. If I draw a straight line here, according to smart money concept, what does it tell us? It tells us that if the market breaks here, there will be an impulsive move. So the impulsive move will start from here, then sell hard to this point. And another thing you should note, breakouts on H1, guys, they are very valid. They are different from those ones on M5 and M1s, whereby it can break out. But if you try to enter buy or sell, it will always make you lose a lot of money. But if you manage to catch a breakout, to enter your trade when the market has broken the structure, you're most likely to win more, especially when you're analyzing using H1. So currently, for us to start catching spikes on Boom 500, it's highly risky. Why? It's because this candle is still what? Is still bearish. We should always trade according to the trend. If this candle was bullish, that is when we were going to enter that trade. So don't be the type of a person that says, today since there are no trades, let me just risk on this one. Then you enter. Yes, sometimes you can win, but always try to wait for your setups. If you end up forgetting about that setup, you can set a reminder for yourself that you should need to check your MT5 maybe after 30 minutes. In that way, you you win more. All right. So since we don't have an entry on b5, let me check on other pairs.
Yeah, step further. Mukambotarisa kuma step further.
Yeah, I will check. Then we have another thing on Boom 500. I think you can all see what's happening on Boom 500 right now. Here, we've got what is called a descending channel. This is what is called a descending channel. Then this is then ascending channel on H1. So if you see that kind of a scenario, even if I draw a channel here, you see, this is H1. This is what I was telling you. So what does this tell you? This is an ascending channel, right? But the market has broken the structure here. This is why I was saying even if you sell here, you're most likely to win more. Why? Because the breakout on H1 is very accurate, unlike those ones on M5 and M1. So that is the thing that you should look at. Before you enter a trade, make sure the candle on H1 is the same as the entry you want to enter. What do I mean? If you want to enter a buy, make sure that there's a bullish candle on on H1. To those who don't understand what I mean by saying bullish, bullish is just a candle that will be showing you that the market is going up. For example, this one. This is the bullish candle, whereby the candlesticks will be moving, going upwards. All right. So that is how you do it. Then the moment it breaks out, like for what happened here, you can also see that this green candle crossed the body of this large candlestick. This is why it moved hard upwards. So you can also use that concept to catch your spikes. The moment it breaks out, you go to your M1, then you wait for it to reach a node, then you enter your buy trades. That is how you do it. So let me check on there's a guy who wants requested that we should check step index. Let me check out crash 300. Crash 300 is seems like it's going down. Let me check. Ah, it is moved. But we have got a very good setup here. Simple things can give you good money, guys. Easy money. Can you see this type of a play? Can you see it? Let me delete this. Let me draw something visible. Yeah, this is very visible. I want you to show you something. I want to show you something that is different from a breakout on H1 and a breakout on M5. Can you see the difference? This is a typical example of a ascending channel that was plotted on Crash 300. So you see, if you see a breakout on M5, it will break out like this. Then most of you start sending screenshots saying you've killed the market, but no, it will pull back like this. Then sell hard. The reason why it pulled back around this red line is because this red line was drawn by the strategy. But our strategy will also show us the areas of resistance. If you check here, there's a blue line. That is when it reached this node and sold hard. So that is how you should do it. We also have another flag here. It crossed around this point, but it pulled back to this zone and then sold late. So that is how it happens. There is never a trade that will happen without any pullback. So take note of that. That is the reason why we always emphasize on the issue of proper risk management. Always use proper risk management. All right, on step, what is our current candle saying? Our current candle is what? Is bearish. But there's something that I was telling you in the afternoon when we had our first live trading session. Never enter a trade 10 minutes after it has changed the hour. You get a biased signal. For instance, here, you can see that the candle is bearish, right? But if you enter a sale right now, you're most likely to lose because it can start to go up there. So you should confirm the entry maybe after 10 minutes. After 10 minutes. So we can only enter trades 10 after 10 past 6. So that is how you analyze it. This one is very simple.
Okay.
It needs
Okay.
it needs you
Thank you so much.
to scalp and always trade according to H1 because most of you would have entered by entries here. Where's the channel? Most of you would have entered the buy entries here just because they think it has broken this channel. Then you enter buy, but you're most likely to lose money. Usually, when it breaks out, step will move impulsively. So if it doesn't move, don't hesitate to close your loss, guys, because it will continue making you lose a lot of money.
Okay, so I wanted to ask us, sorry, Mr. Hilary, for too many questions. I need to understand. So the strategy is the one that indicated for us that support zone, the yellow one.
Yes, it does that automatically.
Okay, okay. And thanks for the insight again for us to enter 10 minutes after an H1 candle is formed for scalping. Because I discovered one thing, some of the time we tend to what can I say, to be tested. The reef usually tests people patience. When you enter a trade, sometimes he retraces and goes to raids to see if you are able to withstand the raids. Like this other day, you shared a signal, and then I entered the signal. I barcoded with the 0.1s, about 5 0.1s, and it retraced to those 10 cents to close to per lot per one position, minus $4 per one position, and they were about 5. And luckily enough, that day I was so intoxicated with alcohol. I was like, let me leave this phone. I'll check it later. Can you guess what happened? 15 minutes later, when I opened my MT5, it was now flashing in blues over $30.
That is what happens usually because you can never enter a trade, then it does what you have said. You say sell, then it just goes down without even pulling back. No, we should leave a room for it to pull back always. And let's always trade according to the bigger time frames. If there's a bigger candle on H1 that is showing you a sell signal or a buy signal, let's respect that candle. Because if you check here, there was a red candle, but you would find that someone was trying to buy it on M5, and you're most likely to lose. If you want to know that the market is now going up for you, it is supposed to break the the point where the channel started. This is the point, right? If it breaks this point, you're not sure that the market is now buying. And also avoid trading these turning points. For instance, you might see someone saying, right now it has reached this turning point, so it's about to create a double bottom. No, Derivative does not work like that. It will always pull back first. Like if you check what the system is saying, it's telling us that the market should sell to this point.
Okay.
So in a nutshell, you can actually sell it until it reaches this point. But since it's around this red line, pullbacks are more likely to happen. So it might pull back.
Okay.
So you just need to be careful. You use your small lot size because a sale entry is valid even if you check on H1.
I have a question.
Mm.
I have a question. So, so I wanted to ask on those sale indicators there that are indicating sales there.
These ones, right?
Yeah.
Mhm.
Can you enter when they indicate the sales there?
All right.
Is it a safe thing to enter?
All right. The thing with those entries, right? It depends with the time frame that you have noticed them. If you see a sale entry on H1 or H4, it means the market has confirmed that it is now selling.
Okay.
But if you see them on M1, on M5, you're most likely to get biased information. That's why I always tell people to start analyzing from H1. So if you see a sell entry on H1, then you see another sell entry on M1, that's a safe trade to end because everything is what is in line.
Okay.
That is why I always emphasize on the top to down analysis, whereby you start by analyzing H4, then we move to a smaller time frame. Others can even start on a 1 week time frame to see how the market has been moving. Because the only thing that's hard for us as forex traders is to wait for a real good setup. Yes, we all want fast money, but we end up entering trades that will make us deposit again.
Bro,
Because
there's no
Boom 500
there's,
just spiked
there's,
so hard.
Because the strategy he had given us the entry, you saw it right.
Yeah.
everything. Thanks for emphasizing there on that. No such thing is called like a good setup. Every setup is a good setup because to analysis. One thing when you are analyzing, you have to trust your analysis. And sometimes there is this market psychology. One thing I tend to see in derivative, even when your analysis is correct, derivative can even sometimes go the other way around just to test your patience, and then it goes the way you are saying it should go.
Yeah, as you can see, what I was telling you, let's say you had entered your trade here. You had used this order block, right, to enter your trade. Maybe your buy entry will be around this area. Can you see the way it spiked? It's almost back to the entry point. But I was saying it's risky now for you to hold a trade so many pips, they are too much. So here it has reached a node. In a nutshell, it's saying it's going to pull back, right? So it's going to pull back then to sell. It will buy hard later. But for you to enter a buy when it's looking like this, it's still risky. It is supposed to pull back to this area again. Then you can try your buy entries.
Okay, so you're saying close to that area when like on the chart you were previously showing. It's more
Mhm.
like emphasizing on that smart money concept. The one you said, the spikes sometimes they have a certain levels they respect. Like I checked this other Zoom session you did the last time when you were saying our spikes respect a certain area. You according to smart money concept. Because if you check some other support lines and other resistance lines, the spikes they tend to happen close to those same areas. Just like on this chart, if you can check all the spikes after that that zone, that flag you have put, you can see that type of flag you have put, right? You
Yes.
can see the 3 spikes. It's more like forming a W or an M-ish. They are almost like closely to the same area. Because yeah, that middle red line, that middle support line, you can see what the ticks are selling and then spiking close to that support blue line. Then comes back, spike, comes back again to that same line. It's spiking harder, and then it's just doing the flip flop. I can now see it and understand it now in better.
Yes. Thank you for the clarity. So this is why I was saying when you're trading spikes, it's always good to catch a spike, you take your profit, you wait for it to pull back, you enter again. Because the spikes are different from other pairs whereby it will just go up like what it did here. It's rare. It will always pull back. Same with this one. Spiked, pulled back, spiked, pulled back, spiked, pulled back, spiked. So according to smart money concept now, we say the market is broken the structure now. And we will see that it has broken the structure here, right? So when it pulls back, you know, enter your buy here. But it shouldn't be a very huge lot size. It should be a very good lot size that will not make you incur huge losses. So when it spikes, you hold. It's always going to pull back like this so that it can push you away. Then it will spike harder. The moment it crosses this area, you add positions because you are not sure that the market has crossed the pullback area. It's now going for an impulsive move.
Okay.
So another question.
I have a question. So, I would want to trade the ticks, especially the ticks. But then I want to know how accurate is this indicator that say sell entry. Would they be no spikes after I've been indicated that this is a sell entry? Like let's look at the sell entry that was just previously given to say sell entry. Are they really accurate to say I can enter? I just want to catch few candlesticks of tick. I think just 3-4 candlesticks.
All right,
Then I'm out.
like what I said before, these entries on M1, they are not reliable
Okay.
because these entries just they show you that there's going to be a small pullback, not
Okay.
not to say the market is now selling.
Okay.
So
Okay. It's
you
just a
should
small
first
pullback. Okay.
confirm with the H1 candle. The H1 candle
Okay.
should confirm first.
Okay.
You get it?
So if the H1 candle is red, most probably we might have a huge pullback.
Yes.
Okay.
When the H1 candle is red, like what I was saying, this you check clearly on the time frame. H1 here. Our H1 candle is still red. So for us to enter a buy here, it's risky. Right.
Okay.
Same
Okay.
as for us to enter a sale, it's risky again. Because no, I thought this was a red line that was projected by the system, but no. For us to
Okay.
enter a buy here, it's risky. Right. And for us to enter a
Okay.
sale again, it's risky. Because if you
The
check
risk,
the last time it gave us a sale entry on H1, is this one. Can you see that it has moved
Okay.
hard?
Yeah, yeah.
To the extent that the chances for it to start pulling back are high.
Yeah, that's true.
So that's the issue. But if you had seen it around this area, maybe you see this sale entry, then the market will be around this area. You won't
Yeah.
even think twice for you to sell. But as for me, I'm not really
Okay.
good at trading ticks. I only know
It's
how
okay.
to trade
That's
spikes because spikes are easier. Spikes, you can hold them until it spikes.
okay.
Ticks is kwekwe baba. Unopinda tiki mudhara pakauya chambo danda respike seriya rakauya nezuro kweNFP riya ndokutaurira
It will not end well. So that is how you trade, guys. Don't force trades whereby you see there's no a clear confirmation, then you just enter just because you are bored. If you are bored, you can try Netflix. Then you have something that you also not playing with money.
Yeah, that's true. So I can even check like on Crash 500, the previous H1 you were opening.
Yeah, the previous
It's
the H1
indicating
candle.
it's buy entry. And around close to that level, it's now reaching to the sell entry zone. Like the close to that node, you see the node that was given, a sell entry that was given by the system.
Yeah, but it's highlighted here.
Yeah, I'm saying it's now close to the fifth node that is
Yeah,
being given. Check that
yeah,
node.
yes. So chances for it to pull back are a bit high now. But we have to
Okay.
enter when it's about to give us an impulsive move.
Okay.
I think I've clarified most of the things that you should take note when you're analyzing the market. So I think on our next live, we are just going to say everyone analyze the market. Then we have our at least 5 entries. Then we enter them as a group and see what we can get.
Yeah, and thanks for that, bro. Yeah, like a collective trading community where you get to discuss issues like this is more helpful and insightful. Because some of the things, bro, I don't want to lie. You might have the system, you might have the data, the laptop, and the money, but actually, when you are looking at candles, sometimes you have that, what can I say? There is a confusion you might be getting, but when you get to discuss as a group, in sharing on the thoughts, you get to have those eye-opening things that will even next time when you get to analyze charts, you now start to see things differently than what you were doing previously.
Yeah, right. It's easier to trade as a group and you not enter trades that will give you loss. So, all right, guys, I'll let you know when we can have another live trading session. So, have a good day.
Thank you so much.
Thank you, Mr. Bitcoin.
All right, sharp.
Thank you.